Amazon stock was down over 30% year to date up until its most recent rally, where it was now down 28% year to date. However, they just reported earnings and are soaring after hours. Is the worst over for Amazon? Let's take a quick look into its earnings. Amazon records $3.9 billion loss on Rivian investment, bringing markdown for the year to $11.5 billion. Amazon's stake in the electric vehicle maker Rivian Automotive was once worth $27 billion. That was in November, shortly after Rivian's IPO, which took place just before the Nasdaq had peaked. But with investors rotating out of risk in 2022 and selling off last year's high-priced IPOs, Amazon has now taken paper losses on its Rivian stake, totaling $11.5 billion for the first 2 quarters, a stretch during which Rivian lost 3/4 of its value. Amazon said in its second quarter earnings report on Thursday that it recorded a $3.9 billion loss on Rivian Holdings during the period. The report comes a day after Ford, which is also one of Rivian's top backers, took a $2.4 billion mark-to-market write-down. Amazon's investment is now worth about $5 billion, so from $27 billion to $5 billion in under a year. The markdowns don't impact Amazon's operations or cash position and just reflect the massive gyrations in the market since last year. The investment could become problematic if Rivian's business hits a snag or runs low on cash, hampering the company's ability to manufacture delivery vehicles at the speed it promised Amazon. However, Amazon said last week it's beginning to roll out some of its electric vehicle delivery vans that developed with Rivian. Amazon said it expects to have thousands of Rivian vans in more than 100 cities by the end of the year, the first step toward its goal of having 100,000 electric delivery vehicles on the road in the US by 2030. So earnings per share, a loss of 20 cents as a result of all the Rivian nonsense, and revenue at $121.23 billion versus the expected $119.09 billion. AWS coming in at $19.7 billion versus the expected $19.56 billion, and advertising also beating at $8.76 billion versus the expected $8.65 billion. Revenue growth of 7% in the second quarter topped estimates, bucking the trend among its big tech peers, which all reported disappointing results prior to Thursday. Apple, along with Amazon, beat expectations. Amazon said it expects to post third quarter revenue between $125 billion and $130 billion, representing growth of 13 to 17%. Analysts were expecting sales of $126.4 billion. Amazon has been contending with higher costs as pandemic-driven expansion left the company with too many workers and too much warehouse capacity. Amazon shaved its headcount by 99,000 people to 1.52 million employees at the end of the second quarter after almost doubling its size during the pandemic. So because of the Rivian write-down, Amazon had an overall loss of $2 billion in the quarter. Analyst EPS estimates vary dramatically, making it difficult to compare actual results to a consensus number, which is why we didn't see an estimate at the EPS and we just saw a loss of 20 cents. So taking a look at the technical analysis, let's actually go all the way back to 2020. We had a rip up from about $100 per share to all the way up to about $175, and trading in this area for the better part of a year and a half. And then 2022 happened and things started getting really volatile, and we fell off a cliff last earnings report at the end of April when we had support around $140 a share, falling all the way down to $100 per share, bouncing between there and $130 a few times, consolidating at where we were right now, and jumping up over 10% to $140 per share. So it'll be interesting to see if we're able to reclaim this area again, or if we're going to get rejected and then trade in between, let's say, 130 and 140. This is also good for the SPY and for the Nasdaq, as they are both reaching the top of their current channels. They have been in a little bit of an uptrend over the past month or so. So if these earnings can hold up and support can hold up, all of a sudden we could be on the road to recovery. So it's very interesting to see that we are at that 138, 140 level. We just have to see how it reacts, if sellers are going to come in and push it back down to these key areas at about 130, or if we're able to reclaim it. And then the next level would be 145, or the 200 simple moving day averages. So let me know in the comments below, what do you think of Amazon's earnings? Do you think it can reclaim this $140 mark? Or is it just going to fake us out and then start trading in between that $130 mark to $140? or is it a lot worse than we think and things are going to go right back down to 100? We could get faked out, or this could be for real. Let me know in the comments below. As always, subscribe and like, and take a look at my description below for links to my Instagram, my Twitter, and my TikTok. I will see you guys in the next video.